At Strategic Capital Partners, we're very bullish on the future of special purpose vehicles, or SPVs. My first introduction to special purpose vehicles was probably about 6-7 years ago when I just started to learn about private markets and learn about kind of the pre-IPO market. And I learned about how Morgan Stanley had set up an SPV, a New Riders LP, for the purposes of allowing their high net worth customers who had more than $10 million in assets to invest in Uber, and at minimum ticket size of $250,000. So at the same time, Merrill Lynch was allowing their high net worth customers who had more than $100 million in assets to invest in Uber through an SPV, but $1 million minimum ticket. The concept there where you have a private company that most investors aren't able to get access to, and now there's the ability to set up a legal structure which will lower that minimum investment size. And the goal was to kind of take that one step forward. So we like to look at business, legal, tech. And if you have the legal structure that allows you to set up a vehicle and aggregate investors and lower that minimum investment size and be a single investor on that company's cap table, that's pretty exciting. But you can understand that the minimum investment size of 250 grand or $1 million might be a little unattainable for most accredited or even non-accredited investors. So by leveraging technology as well as the legal structures, you can really lower that minimum investment size to $1,000, or in some cases to $500. So we're going to be digging into SPVs quite a bit more as we move forward, but wanted to kind of give a brief introduction to SPVs, how they've been utilized by big banks, and how they're going to be utilized today by fundless sponsors, by syndicate leads, as a way for companies to keep their cap table clean, as a way to get access to strategic, accredited, and non-accredited investors, and hopefully drive capital, drive support to businesses that are solving real-world problems.